Hi everyone and welcome all of you to this special video series brought to you by International Tax Academy by Manoj Naudiyal. I am Manoj Naudiyal. This is the second part of the series on UAE TP regime that was unveiled, that was presented recently by the Federal Tax Authority of UAE in the form of a UAE TP guide, CTG Corporate Tax Guide TP1. In the first part of this video, we have seen that there are 9 sections in this TP guide, and in the first part of the video we have discussed sections 1 to 5. That is the glossary, that is first one is glossary, then introduction, then third section was TP at a glance, the fourth section was transcribing principles and fundamentals, fifth was applying the arm's length principle, application of arm's length principle, and the remaining 6, 7, 8, 9, the 4 sections we are going to discuss in this second video. Fine, so let's get started. So CTGTP1, that is TP guide. TP guide. Fine. So sections 1 to 5 we have done. Sections 1 to 5 completed. 6 section. Section 6 is your TP documentation. TP documentation. Okay. First section was what? First section was glossary. Glossary, then you have introduction, then you had TP at a glance, TP at a glance, TP at a glance, then TP principles and fundamentals, and then 1, 2, 3, 4, and then the fifth was application of arm's length principle. Well, so this much we had completed in the first video. 6 is TP documentation. TP documentation, the sixth section of this TP guide deals with TP documentation. So it starts with the objectives of TP documentation. The objectives of TP documentation. What are the objectives of TP documentation? There are 3 objectives. First of all, the TP documentation, by maintaining TP documentation, by creating TP documentation, taxpayers will create a culture of compliance. That is, they will be able to show, they will be able to demonstrate to the Federal Tax Authority that yes, they have taken reasonable efforts to ensure that the conditions of their control transactions are consistent with the arm's length principle. So the first objective is to create a culture of compliance. Fine. The second objective, culture of compliance. Second objective is that TP documentation gives sufficient amount of information to the Federal Tax Authority for carrying out an informed TP risk assessment. So provision of information to the Federal Tax Authority for carrying out an informed TP risk assessment. And then the third objective, that wherever the TP risk assessment would lead to further investigation, that is, would lead to a further full-fledged TP audit, then the TP documentation will also provide focused information, relevant information, detailed information for carrying out a detailed and thorough TP audit. Fine. So these are the 3 objectives: culture of compliance, TP risk assessment, and TP audit. With these 3 objectives, there is 3-tier TP documentation. 3-tier TP documentation. TP documentation. What is that? The first is your master file. Second is your local file, and third is your CBCR, country by country reports. CBC, country by country report. Now let me tell you, TP documentation is present in Article 55. Article 55 of the corporate tax law. It was mentioned. Fine. So the legal basis of this corporate tax regime, legal basis of the TP documentation is present in Article 55 of the corporate tax law. 47 of 2022. In addition to this, there is the ministerial decision 97 of 2023, which establishes the requirements for creating TP documentation for the purposes of corporate tax law. Fine. So these are the legal basis: the corporate tax law 47 of 2022 and the ministerial decision. Fine. So master file, local file and CBCR. Master file for the group as a whole, local file for specific entities, and CBCR, country by country report, for those groups, for those MNEs which form part of the group for whom the consolidated revenue is more than 3.15 billion 3.15 billion AED dirham. Only those MNEs which form a part of the group whose consolidated revenue is more than 3.15 billion AED, they are required to create this CBCR, country by country report. Fine. So master file, overview of the group, local file, transaction specific information, CBCR, indicators of financial activity, allocation of income, allocation of taxes, all these things. Fine. So 3-tier DP documentation in section number 6 explained. Fine. And yes, very important, section 6, subsection 6.3, subsection 6.3, very important, that says that TP documentation has to be maintained, has to be created on a contemporaneous basis. So it should be contemporaneous. That is, what do you mean by contemporaneous TP documentation? Contemporaneous TP documentation is a documentation which is created at the time of entering into the control transaction or latest at the time of filing the returns. Not beyond that. At the time of entering into the transaction, control transaction, or at the time of filing the tax return. Fine. So contemporaneous TP documentation. Fine. Let us move further. So section 6, TP documentation done. 7 is your applied TP. Section number 7, that is special consideration section 7 section is special consideration for specific cases, special consideration for specific cases. This is the applied TP. There are number of sections, subsections in this. First one, financial transactions, comprising of treasury function, then you have intra-group loans, then you have cash pooling arrangements, then you have hedging, then you have financial guarantees, and then you have captive insurance. Fine. So these are the financial transactions that are covered in the first subsection of section number 7. That is why I told you this is the applied TP. This section focuses on ensuring that the conditions of these certain financial transactions between the associated enterprises or the related parties or credited persons, the conditions of these control transactions, they are consistent with the arm's length principle. Only certain financial transactions, not all. Fine. So these financial transactions are mentioned here: treasury, intergroup loans, cash pooling, hedging, financial guarantees, captive insurance. This subsection, the first subsection of section 7, deals with ensuring that the conditions of these certain financial transactions, they are consistent with the arm's length principle. Fine. Second you move to intergroup services. Whether intragroup services have been rendered, And second, if they have been rendered, then how to establish the arm's length price for the intergroup services. Whether intergroup services have been rendered, this would be done, this would be adjudged with the help of the benefits test. So benefits test is described, benefits test, and then you have further issues, issue of duplication, shareholder activity, fine, all those things are further described in the first. Then you have establishing arm's length price for the intergroup services, direct charge method, indirect charge method, fine, cost approach, low value adding intergroup services, 5% markup, comparable and control price method, or other cost based methods, they are described. Fine. So in the second subsection of section 7, IGS are dealt. Intangibles. Third, intangibles. Third subsection deals with intangibles. Identification of intangibles. What are intangibles? So intangibles are defined as something which is not a physical or financial asset, something which is not a physical or financial asset, capable of being owned or controlled for use in commercial activities, and the use or transfer of which would be rewarded if it would occur between independent enterprises in comparable circumstances. Intangibles. Framework. So definition of intangibles, identification of intangibles, definition of intangibles, identification of intangibles, what else? The framework for analyzing the transactions involving intangibles, identification of intangibles, functional analysis, compare it to intangibles, fine. DEMPI framework. What is DEMPI framework? Development, enhancement, maintenance, production and exploitation of intangibles. And the transactions involving intangibles. Transactions involving intangibles. What transactions? Transactions involving the transfer of intangibles or transfer of rights in intangibles, and transactions involving the intangibles in the sale of goods or provision of services. Transactions, two types of transactions. Transactions involving the transfer of intangibles or transfer of rights in intangibles, and transactions involving intangibles for transactions involving intangibles in the sale of goods or in the provision of services. So intangibles, fine. So you find that we are very much into section number 7, financial transaction, intergroup services and intangibles, fine. Further, then you have CCAs, cost contribution arrangements. Cost contribution arrangements. Cost contribution arrangements. You have CCAs, cost contribution arrangements. Cost contribution arrangements. What are CCAs? What are CCAs? Types of CCAs: development CCAs, service CCAs. How do you establish arm's length conditions for a CCA? Arm's length conditions for a CCA. How do you establish arm's length condition for a CCA? The contribution of every participant of a CCA, his proportionate share of the overall contribution should match with his proportionate share of the overall expected benefits out of the CCA. So this is how you apply arm's length principle to the CCA. You determine who is a participant. Determine who is the participant in the CCA. You measure his contribution. And then you apply the value. That is, value of the contribution should match with the expected value of the benefits. Fine. Then the concept of balancing payment, buy-in, buy-out. So all these things are discussed in cost contribution arrangements. Very, very commonly used for creation of intangibles, development of intangibles by the M&E groups. Fine. So CCAs are also discussed. Then further in section 7, you have what? Business restructurings. Reorganization of commercial or financial relations. Business restructurings definition: reorganization of commercial or financial relations between related parties or connected persons that include termination of contracts or substantial renegotiation of existing arrangements, business restructurings. In BR, there are two clearly discernible issues, two separate issues. First is arm's length remuneration for the business restructuring itself. Arm's length remuneration for the business restructuring itself. The first issue. And the second issue is remuneration for post restructuring control transactions. These are discussed. Arm's length remuneration for the business restructuring itself, and second is remuneration for post restructuring control transactions. So arm's length remuneration for business restructuring itself, you carry out a pre-business restructuring functional analysis and you carry out a post-business restructuring functional analysis. So pre-BR functional analysis, post-BR functional analysis. Accurate delineation of the transaction comprising business restructuring. Reasons for business restructuring. Options realistically available. Reallocation of profit potential. Transfer of something of value, and the issue pertaining to indemnification. All these are discussed here in short. And then this remuneration for post restructuring control transactions. Business restructuring. Fine. Okay, we are still very much in section number 7. After this business restructuring, then you have the issue of PEs, permanent establishment. You have issue of permanent establishment. Okay. Permanent establishment, PEs. Okay. PEs, permanent establishment, PEs. PEs are defined in Article 14 of the Corporate Tax Law. Corporate Tax Law, that is 47 of 2022. Article 14 of this Corporate Tax Law defines PEs. Here in this case, in the case of CTGTP 1, that is TP guide, PE, the issue arises that how do you attribute the profits to permanent establishments. So attribution of profits to permanent establishments. Attribution of profits to permanent establishment. This is done using two-step approach. In the first step, you create a functionally independent. For example, this is the PE. This is UAE. Okay, no. This is a foreign jurisdiction, and this is UAE. So this is foreign co, and this is PE. So how do you attribute profit? How do you attribute profits to this PE? In the first step, you will create a functionally independent and separate entity out of this PE, and in the second step, you will attribute profits to this PE analogically using the authorized OECD approach or the two-step approach. Fine. So PE, attribution of profits to permanent establishment, and in this case, the reference is made to the 2010 report of OECD and 2018 report of the OECD. Two-step approach. Right? PEs. Then further you move. Okay. Then you have what? Group synergies. M&Es, they are part of, they are integrated part of whole. They are economically integrated units, many M&Es in one M&E group. So they achieve economies of scale. They achieve management efficiencies, centralized procurement, IP management. So group synergies are those benefits which are achieved by the M&Es. How do you allocate? So group synergies, what is the benefit? Nature, amount, and the allocation. What is group synergy? Nature, what is the amount, and how do you allocate between the M&Es, the entities which create the group synergy benefit? Fine. So all these things, all these different issues, they are present in special considerations for specific cases, that is section number 7, the most detailed section of this TP guide. That is, I told you this is the applied TP, wherein the principles of transfer pricing that you learned in that you have seen in section number 4, they get applied. Fine. So financial transactions, intergroup services, intangibles, cost contribution arrangements, business restructurings, permanent establishment, group synergies. Fine. All these. Okay. Beyond this, the 8th section is TP audit and TP risk assessment. So you have the 8th section as TP audit and TP risk assessment, TP risk assessment, TP risk assessment, TP audit and TP risk assessment. Burden of proof, very very important. Burden of proof. FTA says in the TP guide that the burden of proof lies on the taxpayers. They have to show, they have to prove that the conditions of their control transactions are consistent with the arm's length principle. So burden of proof, very important, on the taxpayers. Burden of proof on the taxpayers. Fine. TP audit, TP risk, certain things I mentioned. One more thing which I would like to mention, which is present here, is non-recognition. Non-recognition. So the control transactions, non-recognition, control transactions which fail the test of commercial rationality. The control transactions which fail the test of commercial rationality, they will be disregarded, they will be non-recognized. So test of commercial rationality, commercial rationality. The legal basis for non-recognition comes from Article 50 of Corporate Tax Law, that deals with GAR, General Anti-Avoidance Rule. So Article 50 of the Corporate Tax Law 47 of 2022, that gives you the legal, that gives the Federal Tax Authority the legal muscle, provides the legal basis for a non-recognition for disregarding a control transaction which fails the test of commercial rationality. Very very important. So please be very very careful, taxpayers, please be very careful that you accordingly take care of all the conditions, all the requirements which are prescribed, so that this, although it's a very very extreme measure, but then this may arise, right? So we have to be very very careful. So TP audit and TP risk assessment, and the last 9, update and version. So this says single line that this CTGTP1 is the first version, that is why it is version number 1. So in the future, if you would have further versions, so this would be 2, 3 and so on. Fine. So this is the bird's eye view of the entire TP guide, UAE TP guide. This one, UAE TP guide, released by FTA very recently, that is last week. Today is in fact what, 2nd of November. Fine. It is 140. It's a 140 page TP guide. I feel it's quite comprehensive, quite expensive, quite comprehensive. Draws heavily from the OECD TP guide to TP guidelines. But then yes, it's customized. It's custom made at several places for the requirements of the UAE taxpayers. Fine. So hope you got insights into this TP guide. At least this would have definitely, these 2 videos, 1 and 2, they would have given you a sufficient overview into this various things which are covered by the TP guide. And do subscribe to the channel, and thank you so much for giving me your time. See you next time. Okay, take care. Thank you.